Good morning, guys. Mike, aka Crypto Jewels. I'm going to do a VRA Verasity update real quick, guys. This video might get a little long. I'm going to get into the weeds and into the details of all the different possibilities this thing can be from an Elliott wave standpoint. Excuse me. I'm a little under the weather still, so I apologize. But guys, again, stick with me. I understand that this might piss some people off because I'm going to basically say it can either go way up or it can go way down. And everybody's going to say, well, yeah, no dud, man. Of course, price can go up and price can go down. But that's not the point of the video. The point of the video is understanding from a trading and analysis standpoint what the options are, what the possibilities are from a structure standpoint on how this price can move on VRA. If you understand what it could and can't do, then it allows you to place your stops at the proper point in order to maximize your gain. Or if you're, a VRA holder and you want to increase your VRA holdings, then you can, set your stops in places where, likely if it breaches those levels, then you can anticipate accumulating more VRA at a lower price. So, there's all sorts of reasons to understand why, prices can do what prices can do and what the different options are and probabilities are from an Elliott wave and from a technical analysis structure standpoint. So let's hop in, guys. I'm not a financial advisor, so don't blindly follow anything I do. All right, so the first scenario I'm going to go over is the bear scenario, okay? I'll go over the bull scenario here in just a minute, but this is the bear case. So as of right now, from an Elliott wave standpoint, this structure right here, from the top of this 5, this entire structure is a corrective structure. This is a WXY creating your A, an ABC creating your B, and a 5-wave C down. So this is a 3-3-5 structure. So 3-3-5 structures, you can have 3 different options. You can have a running flat, which means price will stop above your A. You could have a regular flat, which means price typically creates basically a double bottom with your A, or you could have an expanded flat, which means price breaches the lows and then reverses down here. So from a fib standpoint, from your 5 down to your bottom of your A, this thing extended up to 1, 2, 3, 6, which is indicative, honestly, of an expanded flat, meaning this thing's going to reverse all the way down below your A. So that's a possibility. That's an option 1. And again, guys, when I'm trading, I'm looking at all the possibilities so I can determine where to enter the markets and where to put my stop losses. So if I'm going to, trade this thing, I want to understand all the different scenarios. So that's scenario 1, meaning this thing would extend all the way down to 0.006, about 0.007 cents, all the way down to 0.033. That's the reversal point for an expanded flat C wave. And then there's a running flat, or I'm sorry, a regular flat, which the reversal point would be around 0.008, which is the bottom of A here. And then there's the running flat, which typically reverse fib extension from A to B. They typically go 618 to 786. It could go to 1, so that's anywhere from 0.27 down to 1.5 cents roughly. So as a trader, I will assume that that scenario is going to be correct, and I would look for a reversal in this area here. I would set my stops accordingly in case it does continue to go against me and it ends up being an expanded flat or a regular flat. So what I see this thing looking like as of right now is we've got a 1, an ABC. This is a WXY, creating your 2, and then a 1, 2, 3. And we are currently in our 4 here. This could either be an ABC and this be a 1, 2, and then we'll have our 3, 4, 5 down, or this could be an ABC, ABC, creating your W, X, and your Y. If this thing does come back up and retest the top of this trend line or the top of this symmetrical triangle type of pattern here, which as of right now, it has broken down. But for those of you that live in the crypto space long enough, know that there are things that get faked out. So this could be a WXY, could come back up and test the upper range here. But if not, this could be a 1, 2, 3, 4, 5. Either way, I've got our 5th wave of our 3rd wave here coming down, around 2.5 cents or so, and then a 4-wave correction up, and then a final 5th wave down to about 2 cents, 0.19 to 2 cents. So that is the running flat scenario. And then I would put my my stop loss underneath, basically the bot, wherever this thing wicks down to, I would put my stop loss right below that. That way if price does go against me and I get stopped out, then I would assume that this thing will turn into, like I mentioned before, either a regular flat or an expanded flat. So that's the bear scenario. Now let's look at the bull scenario. So the bullish scenario, I've got this labeled differently. I've still got my bear scenario on this chart. So if you guys can, ignore the red ABC, because that was the bear scenario. What you have is basically a WXY. So this structure here, this WXY would be a corrective structure finishing this correction here, meaning we are on our way up to finish our next 5-wave structure from a macro trend standpoint. This being a 1, 2, 3, 4, 5, creating your 1, a 2, and then you have a 1, 2 setup, which is the blue. So this 1, 2 setup would actually, this is an A wave here. This would be a B and then a C. So this would still have to correct, some more. I don't think that this thing is going to go into this zone and then correct and go straight up, because this is still a 5-wave structure, down, and you can't have, this would be a 2-leg. You can't have a 5-wave structure down. You then have to have a B wave and then a C wave again. So I believe this thing, if this is a 1, 2, this thing will, still correct for a little while here, maybe a month or two, and then you will move on to your 3, 4, 5, creating your 1, 2, your 3, your macro 3 at about 53 cents. And then you'll have your 4 corrective wave, and then your 5th wave up to about $1.20. So that's the bull scenario, meaning that our downtrend, our downward price action will probably end, over the next month or two. And then the bear scenario, guys, is what we just talked about before. And if the bear scenario does play out from a time frame standpoint, I would probably imagine, 3 to 4 months or so. It could be pretty quick. It just really depends on how this C wave unfolds and what it does. But basically it's just a matter of when it touches the zones that it's going to touch and then reverse. So, it could be 2 months, it could be 4 months, but ultimately, even the bear scenario, guys, I still have VRA, going up to these numbers here. Depending on how deep it retraces, I'll have to revise my counts accordingly. But ultimately, I think VRA from a macro standpoint, the macro trend being this 1, 2, 3, 4, 5, this being a 1, 2, 3, I still think our 3rd wave of this macro 1, 2, 3 will be over $1. regardless. So, if you're not in VRA and you're looking for an entry, then you'll want to hope for these low levels here, and then actually buy it and not be afraid once it gets down to these levels. If you're in VRA and you haven't sold and you don't plan on selling, then obviously you don't want to see that pain, and you want this thing to be a 1-2-1-2 setup, and you want it to, go to $1 now. So those are the different scenarios I see, guys, and that's how I evaluate my positions on how I'm going to enter and exit the markets. On VRA, again, I just showed you exactly what I'm thinking and exactly what I will be doing personally as far as entering VRA, putting my stop losses in, and analyzing it moving forward. I hope you guys enjoy. See ya.